Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, is the current government going after your home? I heard Trudeau floating the idea of a 1% speculation tax similar to BC, where if you own a second residence, say a cabin or a cottage, or as they like to say in Eastern Canada on the coast, the camp. Why is it wrong? Why should they be attacking people who perhaps worked hard enough or are lucky enough in their life to actually have a little piece of recreational property somewhere? And now you're also saying they're talking about a capital gains tax on your personal residence? When has becoming a homeowner become a criminal offense? Because it sure sounds like they want to punish you.
Well, you know something, Jim, on this show, I think when they first brought in the fact that Canadians were going to have to report on their annual income tax with the CRA, if they owned residential real estate, and that they were going to have to report if they sold their principal residence for the very first time in Canadian history, I warned that it was a slippery slope that they were headed down. I believe you simply can't trust politicians with your lifetime and your wealth. You have to do your own due diligence, and you have to be always thinking forward. And the recent press that we've read is a prime example of it. Adam Vaughan, who is a member of the Liberal Party, working on the housing file, was asked to do up a document of ideas what to do to curb housing affordability. Long story short, he produced a document that suggested, and I can argue logically suggested, that there should be a speculation tax placed on homes. So even though logically, and from a real estate data perspective, and from a home ownership data perspective, I could argue that the policy that he was suggesting really would do no harm. I also have to say, you could never allow it to take place, because it's the slippery slope that you start down that ends up sucking you into the hole. When the federal government claimed to be acting in the best interest of the Canadian citizens so that they would know who owned what home in Canada, it was a false premise to begin with. They were not entitled to that information because historically, since Confederation, it's never been collected. Canadians do everything that possible financially to own a home and to own it in the most prudent way possible. They pay taxes on the money that they use to take care of and pay for that home. They don't need the government to be sticking their nose in their business. This is not a TFSA. This is not an RRSP where you look for get a deduction for what you're doing. No, you pay taxes on that money, and then you can do what you want with it. You don't want the government reaching in and taxing it again. Now, the policy that Adam Vaughan came up with sound rational. If someone buys a home and flips it in the first year, sells it, there'd be a 50% tax on any capital gain. If they did it in the second year, I think he had like a 30% tax. The third year, fourth year, and fifth year, it was a declining tax. So in the fifth year, you were only paying 5% capital gains. And I'm assuming, although it didn't state it in the document, from 6 year forward, you would not pay any capital gains. So that sounds okay, because we know on average, the average Canadian family stays in the home that they purchase around 12 years before they move. So let me debunk all of the myths out there that are propagated by organized real estate. Canadians do not move every 5 to 6 years. They never have. It's a myth. It is a financial impossibility for those families. They cannot move in 5 to 6 years. 12 years, they can move, and that's when they move, on average. So you could say if the tax ended on the 6th year, the vast majority of Canadians wouldn't be hurt by it. I mean, you could add in. We could have an exception. If you're relocated by your employer, or you have to take a new job, or you have to change because of divorce, or whatever the situation, they could all give these caveats and outs. But what we risk is, as a society, is giving government more control over our financial lives. And I really believe, Jim, that is going to be the defining feature of this election. We are going to decide whether Canada will turn towards a socialist country or we will stay where we are today, a compassionate capitalist country. In this country, we take care of one another. In this country, every homeowner is concerned about homeownership affordability. Every homeowner, every family is worried about the next generation. We care about one another. We have a publicly funded healthcare system where the taxpayer pays for our healthcare system. That's who we are as a nation. We also try to improve ourselves, improve our lot in life. We try to improve it for the next generation, our kids. We do that by being prudent with our money, owning a home, paying it off, investing, watching our taxes, working hard. That's what Canadians do. So the moment the government brings up, even slightly, the absurd and absolutely wealth-destroying idea that they were going to put some kind of a capital gains expense on the principal residence, the entire nation should be up in arms.
Well,
unless
Ross,
you want a socialist country.
Ross, wouldn't doing that also destroy the real estate ladder as you move up, where you try to go from a condo to a townhouse to a detached house?
Well, it would impair it, Jim, if you were taking extra steps. So what happens when the housing market gets really active, like it was in British Columbia in the fall of 2015, spring of 2016, before the housing market rolled over, which again I will reinforce was prior to any of the taxes being applied, or in Toronto in the fall of 2016, spring of 2017. Again, I will reiterate, well before the taxes were ever even being mentioned. At those stages, because the price gains over the certain period of time had escalated so high, people weren't able to move up the property ladder with as big a steps as they could back in 2011, 12, and 13. So what happens then is to move up the property ladder, especially for young first-time buyers, they have to take smaller steps. Well, if you're taking smaller steps, first of all, it's a wealth destroyer because you have real estate fees, land transfer tax, moving fees, lost wages. Yes, people, when you move, you lose wages. You are not as effective as an employee or as a business person in the months that you're engaged in moving. all of those costs remove home equity. They remove the wealth that you've built paying down your mortgage. And at those periods of time, people have to take more steps. They can't take those big strides. What used to make them take an increase in mortgage of, say, for the sake of the argument, $150,000, now they're looking at $250,000, and they're not willing to take that step. So they'll take an intermediary step. Organized real estate, big realty, big banks, they do nothing to educate those home buyers about the cost of making that extra step. I mean, our platform is designed specifically to try to eliminate at least one step. Because if we can eliminate one step, we know that you're going to be about 20% wealthier through home ownership at the end of your life cycle, just by removing that one step. So if they put any hurdles in there that add to the cost of taking those steps, then yes, Jim, it's going to create a problem. It's going to break the property ladder. It's going to take extra steps to be added. Extra steps mean you're going to spend more money. You're going to pay more tax dollars. Maybe that's really, Jim, maybe that's what's really going on. I want your listeners to comprehend something here. It is highly likely that you are going to pay around 30% more for your home because you're paying for it with after-tax dollars. So over your lifetime, assuming the income tax rates stay where they are today, assuming you get raises in your career as you move along, assuming you pay off your mortgage in the same way that all Canadians have paid off their mortgage over the last, since Confederation, you're going to be actually having to earn 30% more because the government is going to take 30% in tax. Now, the cost of your home is coming out of your after-tax income. If the government does anything where effectively you're paying tax again, it means it's highly probable they're looking to get almost a 100% income tax from you at the end of the day. That is the slippery slope that we're down. What needs to happen right now is we need to embarrass the Liberal Party and create fear so that they don't allow this misdirected policy to become even possible. Because I'll tell you, looking at the communications between the affordability groups, certainly the academics in British Columbia who have been on this kick about a wealth tax for those who were lucky enough to get into the housing market in the 1990s. Government who are looking to get revenues. We've got a $14 billion deficit in Canada this year again. We don't even want to talk about the provincial deficit. These people will always all be looking for money. And here's where the problem is. Interest rates, mortgage rates, will not stay down forever. There is going to be something that happens to the economy, whether it is a depression, which wipes out the debt that we're sitting at now, or it's a war or something else that leads to higher interest rates. Interest rates will rise once again. They rose in the 60s and 70s and early 80s. They're going to rise again. It's just the way that it works. Governments cannot handle a rise in interest rates because they are now carrying so much debt. They're only paying a teeny-weeny bit of interest on that mortgage debt right now, which allows them to buy more, to have a larger deficit, add more mortgage, add more debt to the government, to the country. When rates rise, those deficits will skyrocket. debt will accumulate at a higher rate. There is no escaping that path. We should have been using any deficit that we took on the last few years to build our economy. That did not happen. Canada is on weak legs as far as we look at the economy. When you hear governments even mentioning the principal residence capital tax exemption, you should be running to the polls, voting them out. You do not make money, wealth, on your home without paying a commensurate amount of tax dollars to do so. It is a myth, a falsehood. The same type of falsehood that has young couples today believing it's more expensive to buy a home in Toronto today than it was in 1990. They believe that when you can sit down with a calculator, a spreadsheet, and you can show them that's false. Don't trust anyone, folks, including those who are trying to buy you off with their votes, with your own money, no matter what party they're running for.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, the province of Alberta has issued a report on the regulation of Alberta's real estate industry. Your history here goes way back to 2013 in a CBC interview. What do you make of this report?
What I make of this report is the same as I made of the report when the British Columbia regulator was forced to change their policy, when they were forced to restructure. Now it's Alberta's turn. Look, the Real Estate Council of British Columbia ignored our warnings. We gave them warnings what was going on. We explained to them the unethical practices that were happening in the real estate industry. That council decided not to listen to us. We know what happened in British Columbia as a result. There's a brand new regulatory structure for organized real estate in British Columbia today. The Real Estate Council of Alberta, again, has ignored our warnings. What has happened in Alberta is they are now under that same pressure. And there was a government review of the organization that took place this year, just this year. And the results are, again, black and white. They are failing to protect the consumer. Now, what I want to say is this, Jim. I don't know if it's our letters and it's our warnings that are going to those overseeing these regulators that is forcing these changes to happen. It could all just be a coincidence. You know, it could just be a fluke. But what has happened is that for the first time, there is someone who knows how the industry works, how organized real estate is structured, and they have an understanding of the historical perspective on the entire home trading infrastructure in Canada. All the Real Estate Council of Alberta needed to do was act upon our warnings. When we were seeing agents doing things unethical and we pointed them out, they said thanks, but they didn't act. In British Columbia, when it became clear to us that realtors were violating the Real Estate Trading Act in British Columbia, and we pointed it out to the regulator, they ignored us. So you just have to go one step ahead. We're also looking at Ontario, because Ontario is exactly the same as Alberta and BC before it. You have regulators who fail to enforce the act. They fail to protect the public. They act as advocates for those they are regulating. They don't regulate them. It is not correct that the Real Estate Councils of British Columbia allow realtors to violate provincial trading legislation by guessing at housing markets. It's the same in Alberta. It's the same in Ontario. I am speaking about something that is against the law. There's nothing wrong with changing the law if you want to allow this to happen. But the laws are in place to keep things under control. There's a reason why you need to have the word sales representative on your business card in Ontario if you're selling homes. It's so the public understands, at least somehow, that you're just a salesperson. You're not an advisor. You're not a consultant. You're not a lawyer. You're not a home inspector. You're a simple salesperson. You should have pride in being a salesperson. I know I had pride in it for 25 years. My father had pride in it for his 25 years, as did my mother, my wife, my great uncle. Everybody had pride in it. We had no problem presenting a business card that had the word sales representative on it, because that's what we were. Our clients were never confused. Ross is here to sell us a house. End of discussion. Ross is not here to not sell us a house. I left organized real estate so I could give people the advice not to buy a house right now. I'm not a salesperson any longer. What's happened in Alberta was organized real estate, the local real estate boards in Calgary and Edmonton, were putting undue pressure on the regulator to not prosecute registrants for violations of the Act. They were playing pick the winner, these boards were. They were stacking the deck against some realtors who were selling lots of houses, who were doing the exact same thing as everyone else, and then they were deciding to make them an example, even though those realtors were not harming the public. So that needed to end. In Ontario, right now, I can drive down a street and look in a newspaper. I can listen to on the radio. I can watch television, and I can literally see thousands of violations of the Trading Act taking place every single day. Violations that I refused to commit for the 25 years I was in the business, because I was told that was against the law. But they're doing it regularly today. Alberta has had local real estate boards misrepresent the housing market to Albertans at least since 2012. In 2013 is when CBC interviewed me, and I exposed the con that was ongoing. They repeated the con in 2015 when they changed the MLS reporting rules province-wide, which made all of the data no longer historically comparable. What that means is any housing chart that you see for Alberta or Canada is no longer valid if it has 2014 and 2016 years included on it. Because the Alberta real estate, the real estate boards decided to change the rules. And they refused to tell the public because it was too embarrassing what they were doing prior to the change. It would have destroyed their business model. It would have exposed them for a fraud. What they do instead, they let their chief economist talk, who can't be charged by the regulator. What happens in British Columbia? They let their chief economist talk in the news, make statements of fact. What do they do in Ontario? They let their chief economist or their marketing directors, who can't be charged, speak the facts. You never hear a board president, you never hear the board of directors ever being quoted in any of these articles with a data point. Not once. You did not see the president of the Canadian Real Estate Association make a firm commitment about a data point, a statistics, or a market influence in August's release of data that just happened this week with Canadian Real Estate Association. You have him here, all real estate is local. Call a local realtor. That's their commentary summed up 100% for the last 40 years. Yet the economists, they can tell you any story that they want, and there's nothing that you can do about it. So, what's happened in Alberta has already happened in British Columbia. It's going to happen in Ontario. And that means it's going to happen everywhere else. Quebec is a little bit different. They are already operating on a different set of rules. Their MLS infrastructure is totally different than the rest of the country. It's why you can't read the Canadian Real Estate Association stats without understanding how centrist the MLS system in Quebec operates. And Eric Carbonneau consulted with me when they made their changes to centrist back in the mid-10s. So I know what I'm talking about here, folks. These are all very important things for you as a home buyer or as a home seller or as a homeowner, because your wealth depends upon it. Please don't rely on provincial regulators to protect you, because they have proven not to be a reliable source for you to rely upon.
We'll have more with Ross Kay right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ross Kay. Ross, home buyers are looking for answers from politicians to housing market issues. What do you see coming forward in this year's election campaign for home buyers?
What do I see coming in this year's election campaign for home buyers? I'm already seeing governments willing to indebt the country more to try to buy your vote. It's happening from all parties. No party is escaping this payoff. This attempt to get you to cast their vote. But what they're not saying is how this is going to lessen affordability long term. They're not even discussing how it's going to make your life more affordable long term. Because everything that they're suggesting today is only going to cause long-term unaffordability to result. What they're proposing are all ideas that sound, at times, really good. They're proposing ideas that are coming from places I have no idea where. Jagmeet Singh today supposedly says he's going to create 500,000 affordable housing spaces over the next 10 years. So that's 50,000 per year. Now, think about it, folks. It's highly likely that they're going to have to spend, on average, across Canada, especially considering where affordability pressures are the highest, meaning British Columbia and Ontario. They're going to be looking around $250,000 per unit. Now imagine the cost of his promise. How is that going to be budgeted for? How is it going to be paid for? What is the plan to roll out 50,000 affordable units a year? Are the contractors available? Is the funding in place? There's a plethora of items. This simply is not going to happen if he was elected in the first 4 years of his government. It will not happen. We have the Conservative government today saying that they're going to reduce income tax on low-income Canadians. Now, I will tell you, I think that is the single best policy being announced. I know CBC and the news is saying, oh, but there's millions of people who don't pay income tax anyways. That doesn't matter. The more Canadians, the higher the minimum income threshold before income tax is payable, means that more families have more money to spend living life. They're not talking about cutting back healthcare, cutting back school, cutting back anything. They're saying that they're going to let more Canadians pay no tax. I'm all for that. In Ontario, everybody laughs at the Ford government. Okay, laugh at them all you want. They created there's the LIFT program here in Ontario. And what that means is, if you're a minimum wage couple, you got about an extra $1,000 cash in your pocket this year. There are people who've able to pay over half of their property taxes simply by this one change. That allows them to put that money in a TFSA if they're smart. So everybody can laugh at it all they want. It was a great change. It's like how we like to see minimum wage raised. We love to see minimum wage raised. We love to see the lowest income earners in the country pay no tax. That's what we like to see. But at the same side, the Conservatives are making, again, irrational comments about 30-year amortizations on mortgages returning to, increasing the RSPs, maybe giving a tax credit. All of these things simply make houses less affordable because they're inflationary by nature. The Green Party, I don't know what they're up to, but they think that we shouldn't be having a backyard garden. They think we shouldn't have cars, which means densification of our cities. I'm sorry, folks. That is a constrained life. That's how we see it. I'm not saying we're right. I'm just saying that's how we see it. So all of these parties are simply misinformed about the housing market and about home ownership. They listen to all of these other voices, special interest groups, instead of looking at the data. And the data is quite simple. The data today shows the average first-time buyer in Canada can buy a house and live in it for the next 30 years cheaper than what someone in 1990 could do it. The identical house, the identical city. You don't hear that anywhere. You hear income to debt ratios, house price to income ratios. It's absurd. It's a commentary coming from someone who clearly has not studied home ownership. And those are the same people who are guiding those running to be elected as the next Prime Minister of Canada. You need to sit back as voters and ask, if you're going to give me something, what are my kids going to be asked to pay for it? Because anyone who thinks in a country like Canada that we can go to corporations and tax corporations who are already forced to compete in a global market unfairly, they have to compete supporting workers who earn good wages, support a healthy environment where there's oversight of their business, support a tax structure where Canadians can live. If you think you can go after them for more money, I'm sorry, I don't see it being possible. They'll just leave Canada for another country. If we're looking to tax the wealthy, we'll be forewarned. It's very easy for anyone to leave Canada and take their money with them. Or take part of their money with them and leave a little tiny bit here. We need to look at this proactively as a group, as a society. And we need to understand, if they're trying to buy me off by giving me something, they've got a knife, they've got their other hand in my back pocket, waiting to grab my wallet when I'm not looking. If that happens to be capital gains tax being applied to a principal residence, if that happens to be by making me live on a little tiny 10 square foot piece of ground stacked up one on top of another, I have to understand that's what I'm voting to accept for the next 40, 50, 100 years of my life.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.